which macro themes you're going to be paying the most attention to in 2021?
Well, the macro theme, because of the the lockdowns and the contraction in GDP around the world, the macro theme is just basically watching the economy and all of the major governments' response to this crisis. And their response, the central banks have shown that the only thing they know how to do is create currency. By the way, I'm trying to get as many people to refer to the proper definitions of currency and money as possible. Money, there's some attributes that currency and money have to have. And currency has to be a medium of exchange, a unit of account. It's got to be portable, durable, divisible, something called fungible, where all the units are interchangeable. If you loan me a $20 bill, I can pay you back a 10, a 5, and 5 ones, and you don't care. That's fungibility. Money has to be all of those things, plus a store of value. Currency does not have to be a store of value. Money has to be a store of value. Gold purchases relatively the same amount as it did in ancient Rome. I mean, it stores value over the centuries. It stores value. It bounces up and down in a range of purchasing power. Right now, its purchasing power is very, very low compared to all the stuff that we have in society. A couple thousand years ago, people had a bed, a goat, a pair of shoes, one outfit of clothes, and that was like it. Today, everybody's got cell phones and TVs and cars and all this other stuff, but there's relatively the same amount of gold per person. And so gold should be purchasing many, many, many times more stuff. Why doesn't it? Because we diluted gold's purchasing power with all of the other liquid financial assets that we've created in this 2,000-year period. But really, there's about the same amount of gold per person on the planet. And so its purchasing power, when those other assets, things like bonds and stocks, when they become less trusted and people run back towards safe havens, the purchasing power increases many, many times. And I believe that is what is going to be happening over the next couple of years here.
Yep.
And this year, you asked about what I'm watching out for this year. I'm watching out for the massive currency creation that they're going to do, the dilution of the currency supply. And I'm also trying, like I said, I'm trying to get people to call. There is no national currency that is money. Stop calling it money. It's not money. It doesn't store value. Its very design requires that it constantly loses value, because when they create currency and buy a bond with it, that's how the Federal Reserve or a central bank gets their currency into circulation. They whip up numbers out of thin air, just type them in, and then they buy something with those numbers. Those numbers are not money. Those numbers that have an official designation of a Canadian dollar or a euro or the US dollar or the Aussie dollar, those numbers are just currency. They do not store value. And the reason they don't store value is because typically the central bank will purchase a bond of that country, and the bond requires that principal plus interest be paid. So what is backing that currency is debt. And when you back the currency with debt, the country has to tax the population in the future to pay the principal plus the interest on the debt, except the currency to pay the interest doesn't exist yet. There is always more debt than there is currency. And so to pay that interest, you've got to create more currency. So they have to dilute the currency supply constantly over the years. It's impossible to not dilute the currency supply in a fiat currency system like this, a debt-based fiat currency system, without collapsing the whole thing. Right. So they have to steal purchasing power from people constantly through this dilution. Anyway, that's a tangent. I went off way too much, but I am looking for, I do think that this year there's going to be some tremendous market correction. I think that people are going to start coming to the conclusion that they have to sort of run for safety.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
Now, a lot of people think that the markets are so manipulated now by the central banks and the governments that they can't crash anymore, that they're just going to go up. Well, why did they do such an enormous pullback in March? I believe that the world's central banks can manipulate the markets, but they can't overcome the free market in the short term. What they can do is create a tremendous amount of currency after a market crash, get the markets to go up. And when they do that, they steal wealth from the poor and the middle class, people that are holding on to currency, and they boost financial assets such as the stock market, making Bill Gates and Jeff Bezos centibillionaires. So they're stealing from the rest of the population, and they're bestowing that stolen wealth upon the wealthiest people on the planet.
If this occurs 2021, it's hard to time these things. I don't ask for specifics, but in that scenario, Mike, would you expect a similar response this time to the crash we had in March, where there's a flight to US dollars before cash gets redistributed to probably hard assets instead of financial assets?
There will be both, because each time it's going to be less and less a flight to US dollars, because when you talk about the US dollar, you're usually talking about US treasuries.
Sure.
And bonds are becoming, if you have a population that isn't as rich as it was the previous year, and our GDP contracted because of these lockdowns. So if you have a smaller tax base, the bonds become more and more suspect over the years, because the bonds rely on future taxation. This is part of, we live in a modern monetary system that is it's a feudal type of system. We are serfs because we have to work to replace stolen purchasing power that they do through taxation to pay the principal and the interest on. We're paying off in the US. We've got 30-year bonds. So we're paying off the prosperity that we enjoyed under the first George Bush, back in the 90s. We just finished paying off the Ronald Reagan era. There is a market crash coming, but each time there is a flight to safety, you're going to see a higher percentage go toward gold, silver, and cryptos, and a smaller percentage going toward bonds, because bonds in a shrinking GDP, and the big brokerage firms can figure this out. It takes them a little longer. I'm surprised that it took them this long to start identifying cryptocurrencies and stuff. As we're starting to see big firms that are normally investing in only traditional financial assets starting to go into cryptocurrency. We're starting to see big pension funds announce that they're going to be purchasing gold. And this is just something that is a transition. And these guys are late, but they can still make the party. They're just not early for the party. You and I were early for this party, which is great. Gold and silver have been the number one performer, behind cryptocurrencies, Bitcoin and such. Yeah. They've been the number one performing asset of this century. And people still think it's a lunatic fringe thing. Right. The average person. I remember back in 2001, 2002, I was trying to get people to take a look at gold. And they'd say, gold, that's been going down for 20 years. That's the worst investment you could make. And I'd say, exactly, it's been going down for 20 years. Don't you get that?
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with firsthand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. we have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.